Traders, what I'd like to say in starting out, I want you to understand this. It's so important. You have to absolutely fall in love with trading. That's right. An agape type, religious sort of love of trading. You have to have that as your base foundation to be a successful trader. It only stands to reason that any time a person takes up a business or a profession, they have to really love the work. They have to love the work beyond just the results of making money. And that is very important in trading. So I often tell traders that. Fall in love with trading. Really get into it. There are many things that are going to come up in trading that are going to challenge parts of you unlike any other business in the industry. So I really want you to understand that when that happens, you're going to need the right tools to be able to handle that. Now, we have our webinars here. You have my encouragement. You can email me anytime with questions. You all know that, or most of you should. And so what I'm saying in advance is that you have to know how to deal with the psychological aspects of what's going on the right side of the chart when you're trading. Now, before we get started with that, I want to show you another really important aspect of trading. Now, if you're trading the U.S. stock indexes like we do with the NASDAQ on Boomerang, you need to know what's going on in the markets. Now, the last 2 weeks have been an excellent example, and especially the last 2 days, 2-3 sessions. Boomerang works under all conditions, and I'm going to show you today how fabulous it has worked the last couple weeks. But you still need to know what's going on. I mean, it's like if you're gonna go have a baseball game with your friends and you've planned it, and the weather forecast says rainy all day, thunder and showers. It doesn't matter how much you guys have practiced or how excited you are or how much food you bought for the picnic or whatever. The weather report says thunderstorms. That game has got to be canceled. That's called the market environment or the environment for the day. The park's going to be wet. It's not going to pan out. Similarly, when you're trading, you need to keep this up in your favorites and look at it every single day. It's called the econoday.com. It's the website is right here, HTTP up here. You see this? mam.econoday.com. This tells you every day in the U.S. what the key government reports are that are coming out. Now, the reason I'm bringing this up before the psychological aspect of what I'm going to show you today is that you need to know whether it's going to rain in the park today or what's going to happen. Is it going to be sunny in the morning, cloudy in the afternoon, etc.? Just to give you that example. These are not hard to learn. The key ones are shown here every day. See, Tuesday, Wednesday, Thursday, Friday. They're all marked right here, and they'll tell you when things are happening, events. Now, this is not a class in itself, and I'm not trying to make it that. I'm just showing you that you need to look at the government reports every day. Most of the really key ones come out in pre-market, which is the market opens at 9:30 Eastern Standard Time. So you're going to see a lot of these really important ones coming out in pre-market and at 10 o'clock. Now here's a housing report that came out today at 10 o'clock. That's going to affect the markets. Lately, real estate has been important, and that's going to housing. It's going to affect the markets. Here's the important pre-market ones: consumer price index, stuff like that. Jobless claims, housing starts. Again, the Philly Fed survey. This is an odd little survey that comes out every couple of weeks. 10 o'clock. You know, always watch that 10 o'clock time, the top of the hour. The Philly Fed's usually going to wiggle the market around a little bit. It's not necessarily going to cause a big move like a key report, but it's practically all the time going to wiggle the market around a little bit. So make sure and keep an eye out for that. And again, you watch for the FOMC meetings and things like that. Study this a little bit. You'll get to know the key reports. One way is to go and take a free trial to my daily directional forecast. Now, if you're trading the stock index, you really need to have the daily directional forecast. It's very, very low cost, like all my services. But the most important thing is that on the daily direction forecast, I tell traders exactly where the market's going each day. That's right. I tell you where it's going to go in the morning. Usually I give you a double call, like it's going to rise in the morning and then shift and reverse in the mid-afternoon, or hang up at the highs and make a mild scalp pullback. And then I give you exact numbers where to make one trade a day on the newsletter. Our newsletter is a one trade a day newsletter, and it's very successful. We're about 80% of the time we're correct, and our trades are usually correct too. So something to think about. I'd like you to really consider that. Also, once you study and learn a little bit about the government reports, I want you to really realize that trading is a psychological mindset game. The reason is that when you get to the right side of the chart, you may totally understand the Boomerang rules. You may have them memorized. You may have done simulation trading for quite some time and followed all the rules perfectly. But when you get to the right side of a chart and you can't see what's going forward, there's a certain type of mindset that comes in the minute you click and enter a trade. Certain fears rise, certain emotions rise, your connections with money, the issues you have with money. I've seen very, very wealthy people who've been highly successful in other businesses come into trading and completely bomb because they come in with an attitude of, I'm a big shot, I know what I'm doing, I've run 5 successful businesses, and I got everything handled, and they start trading and they're confronted with things they never knew existed, and they certainly didn't exist in those other businesses they started. And all of a sudden, you know, they're maybe not doing so well because they're not following a proven system, and they haven't studied trader mindset or key affirmations, which I give here. So I'm just saying, as you're starting out with Boomerang, whether you're a new trader or an older trader, always remember you need to go back to trading affirmations, say them every day. I would also like you to purchase as quickly as possible Mark Douglas, Trading in the Zone. He's a friend of mine. He came and lectured at a webinar or a seminar, a live seminar I did some years ago. We had over 320 traders there, and Mark knocked them dead for a couple hours. He's a fantastic speaker, but he really teaches you how to trade in the zone in the proper trading mindset. The book can be purchased for very low cost. I'll show you that in a second. The Magic 7 internal and external affirmations, one that I designed to help you stay on track with your understanding of trading. So you can get these right here on the blog. All the references you need are on the blog to trade with Boomerang under Resources, and you go over to Resources, and you go right here to Trading Mindset Report. And again, it's the only book you'll need on trading psychology and mindset. You should study it like your life depended on it in trading. As much as you're looking at these charts and going to listen to me today about Boomerang and how to make potentially up to 100% winning trades, you still need to understand your own psychology from experts in trading psychology. That's Mark Douglas. Right here, look at that, used, 12 bucks. One click, 12 bucks delivered to your door. If you want to read his first book, The Disciplined Trader, 12 bucks also. Excellent book, but all you need is Trading in the Zone. You don't have to go into a massive study of trading psychology, although if you want to, it's very good for you. But just get this one book and study it with a yellow marker in hand. Study it every day, just like you do our charts, and you will be much more successful, and you'll understand what's going on from a top pro in the industry. So moving on, here is Day Trader. This is the Boomerang Day Trader. I'm going to go over some things with you today, but first of all, I want to say this. You have to remember that Boomerang Day Trader methods are incredibly simple. You pros out there that bought Boomerang and got involved with it understand that the methods in the system that I show you are quite simple. You want complex, try trading options, try learning butterfly spreads and iron condors. Myself, I tried studying that stuff and it still just twists my head. You know, I've had it auto-traded before and I've had winning trades from it, but it's being auto-traded by another service who does it, and I look at it and I try and study, and I just twist my brain. That stuff is so complex. Boomerang Day Trader is very, very simple. The rules are very simple. However, the markets are not necessarily simple. They're moving around in a very hard and fast fashion, especially as we saw today with that. Finally, these guys got it together and organized some kind of debt ceiling agreement, so the market shot higher, screamed higher. However, trading is simply organizing data. Boomerang Day Trader and the rules and the method are simply a method of organizing data. That's all it is, really. That's all it is. You're taking data, which is these numbers that are flying around everywhere, and you're organizing them into a set of rules. This is what I've done actually for you, is a set of rules and methods that you use to enter the market. We have one simple method based on using the white line, which you all should be familiar with by now, the white line crossing the rim of the trade channel. The dynamic trend bands must be the same matching, or the number 1 must be the same color, and in a close approximation of about 2.5 points or less on NASDAQ. Now you can use Boomerang Day Trader on any active futures trading contract, but the system that I show you here, and we're kind of focused on that because it's such a successful 80% winning trade system, that we just focus on this one method, and you can take this method, you can apply it to other contracts like gold or crude oil or any of the active contracts. But just remember, the reason we use NASDAQ is that it's active just about every day. And it's much better than ES because ES has become convoluted with lots of trading programs and hedge fund managers that are using it for other purposes. They may be net long, but they've got 5,000 ES contracts holding short because they're hedging a certain level of the market or something. So you see what I'm saying? So you're trying to trade, and some hedge fund comes in and puts 5,000 contracts short, and that's going to affect the market, even though they're in their strategy, they're net long, maybe millions of shares of other stocks. They may be pulling strategies like this on the ES. Not as prominent on the NASDAQ. It's a little lower volume contract. But here's our entire rules. This is it. One simple day trading approach. It starts with this number 1 here, and it ends down with 4 simple rules. Do you see that? That's very important to understand. I'll be referencing back to this. Now, most of you, I assume, came to the webinar where we went over all the trades and everything like that. We're not going to go over that again. Of course, we're going to cover some trades. Then we're going to go quickly into the question and answer period because I know you got some questions. I want to answer them live and have a chart in front of you. But I've got some very important and new things to show you today. They're not going to be added to this rule sheet. The reason is I want to keep this very short and simple. Those of you who are serious about trading, and especially if you own Boomerang, I want you to get maximum value out of Boomerang. So keep in mind, day trading and trading with Boomerang is a dynamic, organic, living thing, just like a living, breathing body of a human or a plant or an animal. I mean, it breathes and absorbs things, and it changes. And I'm just saying, don't get stuck in your mind on one idea, but be open to things that I come up with and research and develop that are going to help us trade better. If it becomes so vital that I need to add it to the rules, I will, but just take notes on it now. Use common sense, which is a very important thing to learn in trading. Just use common sense, and you'll see the stuff that I show you today, how it'll help you. All right, that being said, how would you like to have 100% winning trades every day for weeks and weeks and months on end? Sound impossible? Well, it's really not. Give me a break, 95%, 100%, 92%. A lot of winning trades, practically all of them. Here's how you do it with Boomerang Day Trader. First of all, I'm going to shrink down a couple elements in the chart here just to give us more room, that's all. Now, as you know, we focus nowadays for the method mostly on the dynamic trend bands. Now, if you want an introduction to Boomerang Day Trader, if you came to this webinar and you're absolutely never even heard of us before, whatever, you can go on the blog that I showed you earlier, boomerangtrader.com, and go over some of our 5-minute video tutorials and things like that. They will teach you and show you exactly what all these elements of Boomerang are. I'll go over them briefly now, but for a more in-depth look, that's what you want to do. What we have on Boomerang Day Trader is we have what's called a trade channel. You see this arrow right here? This arrow, I'm going to quickly switch to a pointer. You go to do that on your chart, you go right-click on the chart, go to cursor, and then go to pointer. You see, I'm assuming most of you own Boomerang that are on here today or are highly familiar with NinjaTrader and Boomerang. But I'm going to show you some little things on how to operate on the system so it'll help you. Okay. Trade channels are right here. They're signaled by these arrows, which are alarmed, and they tell you new trade channels opening up. Which it means is that this white line is crossing this red line. The white line is the lead line of the trading channel, and the red line is the outside rim of the trade channel. The trade channels are colored in a mute green here and a mute reddish color on the background of the black background. So it shows up really clear. The next thing you have is this thin dashed line, which is my trade signal line. It's colored and it's extremely sensitive, and we only take trades within the trade channel in that direction we want to go and on a pullback to the trade signal line. What happens is within that new trade channel, when there's a pullback to signal line, there's an instant alarm and dot is printed in a microsecond on the trade signal line here, and it prints up to 6 pullbacks to the signal line within that channel. In this case, there's 4, and the market ran up and didn't tap the signal line. It just barely tapped it, but didn't record a trade at the signal line there. It's extremely precision, and that's what you pay me for. That's what you pay the low cost of Boomerang Day Trader of $11.95 for this kind of accuracy. In addition to that, on the chart, we have the dynamic trend bands, which is dynamic trend band number 2, which is this thicker one here, and the lead one, number 1, is this thinner dashed dotted line here. And they change colors as the bias of the market changes. You with me so far? These triangles here are based on a very intricate pattern, chart pattern within the charts, and they print in a delayed fashion, sometimes instantly, but sometimes delayed after the chart pattern officially sets up. This arrow will print, or this triangle, magenta triangle and a cyan or blue colored triangle. These are called bias accelerator alerts. They're designed so that when you're in a trade and that bias accelerator alert comes on, you can generally look for a runner and you'll see the market surge in that direction, or at least move higher or lower depending on the arrow. Now, they're very excellent because they're identifying a chart pattern that's very vital within Boomerang, and you don't have to know how to read charts to learn it. You just watch for the accelerator alert. Now, just real quickly, let me show you. Here's one here that didn't pan out. Here's one here that panned out in a huge way. Here's one here that panned out really good. Here's another one here that panned out. Here's a red one that did not pan out so well. Here's another one here. You can see, here's one here in the midst of a choppy market where you had some flipping of the patterns. These didn't pan out. You have one here that was in a very spiky, choppy market. This was today's action, right on 10 o'clock when that report came out. The Philly Fed, I think, report came out, spiked the market on typical Philly Fed action here, jerked the market around a little bit. I always expect that. Here's a bias accelerator alert up here. So you can see about 70%, maybe 65% accurate, but very vital. Here's print here, down they come. These are chart patterns that set up in the market, and Boomerang alerts us of that chart pattern. So it's an industry first, something I developed with my programmer, and it's something as an added feature in Boomerang which makes it even more valuable. Down below we have the bias indicator 1, bias indicator 2, and down here we have hyperscalp. I'm going to be going over hyperscalp a little bit later today, just briefly, because I know a lot of you own it, and if you'd like it in your charts, it's very valuable. I'm going to stretch it up here now. Hyperscalp reads divergence in the market, and it reads the Elliott wave patterns in the market, which are really important to know. Now, you don't need to know all this stuff to trade Boomerang Day Trader. You can get started today and follow our simple rules that I'm going to show you, and you can start making 90 to 100% winning trades. Would be pretty nice because most people don't think you can do that in trading, but with Boomerang Day Trader you can. So with that, let me get started. I want to show you how to make 100% winning trades with Boomerang Day Trader. Now this is new. Some of you may have not heard this from me before, but I'm going to show you exactly how it works. First, I'm going to take this chart and we're going to scroll way back here to a new session. Here's a new session coming in right here, kind of into the session. This is, what date was this? This was the 14th, just a couple days ago. I may have to add some more charts to show you what I'm going to show you, but first of all, here's the simple rule. If the dynamic trend bands match in color, you want to trade at the signal line when you see those matching. Okay? I'll show you. Here's an example here. Dynamic trend band was cyan. I'll just call it blue, and I'll call this red, although it's magenta. These are both blue. No trade. They changed to magenta, and there goes the price. Down the price goes. You see that? These are other configurations I'll talk about in a minute, known as fat channels. Color's not matching here. No trade. Here you see the color matching, cyan, with a matching trade channel. Buy the pullback to the signal line when these two match, and up they go. This one's blue, this one's magenta, no match. Right here, you see that? The colors match. So you you wait for a buy channel and you buy at the pullback signal line. Same thing here. The colors don't match until you get right to here. So if you trade right here at the signal line, you're going to have a winning trade. Colors are mixed here, but right here what happens? They match again. Magenta, magenta, or red. Pull back to the signal line, winning trade. Here, one is magenta, one is blue. They're not matching, no trade. Now, this is clearly the end of a long extended channel here. So you got to expect some choppiness. That's one of our trainings, is that look for choppiness at the end of a long extended move. Now you may say, well, there they matched. That's not a winning trade. Well, okay, you got me. There was a very minor, brief, choppy period at the end of this long extended move where they matched. But I'm talking more in terms of fresh trades that start out or that are getting expanded. Well, even if you said that, here is a matching magenta color here, magenta color here, pullback signal line, down they go. You see? These are both magenta, so this is different here. Now you could say, well, these are both magenta, right? Well, if you caught this pullback to the signal line here, I have to switch the cursor back to crosshair to show you. The first pullback signal line was, oh, sorry about that. Well, you can see it's working. I'm showing a ZN chart here. I accidentally brought my ZN chart out. This is not NASDAQ. This is the bonds. But you can see it's still working. Let me switch that over. ZN is a very good contract, by the way, to trade if you can handle the heavier heat, because it's 16 bucks a tick. ZN is the most highest volume contract in the futures market. 10-year notes. Okay, let's try that again. Matching right here, up they go. Matching dynamic trend bands here, up they go. No match here. Here's a quick match here. Pull back to the signal line, up they go. Here's right at this point is where they match. Down the price goes. Here's right here at this candle. Let's see. Well, probably this one, but let's take the next one right here. The dynamic trend bands are matching. Here's a pullback signal line. Up they go. Right at this point, the two dynamic trend bands are matching. There's a pullback to the signal line here at 41.25 that runs down to 38, but this is obviously a spike move that created a fat channel, which most of you are familiar with that rule. Here is a dynamic trend bands matching here. The market jumped up, but you're already well into a channel that's expanding very quickly. But still, you get the idea. The market goes up when the bands match. Right here is exactly where the dynamic trend bands change match color. 45.5 goes down to 41. Here, right here, the dynamic trend bands match exactly on this candle and pullback signal line. 47 runs up to 52. That was after the close. I'm just showing you the chart pattern so you can understand. Let me roll through these real quick, and then I'll move on to a couple other things, and we'll move into question and answer period. It's 1:45 now, so we've already gone about a half an hour. I'm just trying to show you this. The matching dynamic trend bands is going to produce winning trades almost 100% of the time. Yes, if you have a spike fat channel, what we call these here, fat channels, just a term, because I'm going to come up with a new one today, which I'm going to show you in a second, called wide channels. It's based on the dynamic trend bands. Oh, there's going to be a lot of good new information for you here. If you got a fat channel, those are going to reverse. They may not take out the trend, and in most cases I'll show you where they won't, but they're going to reverse because it's too much. Look at this. It started up here. This was a fat channel here because look at spike, spike, spike up. This channel gets too fat. That's why we use the 450 ticks on NASDAQ, and all these things I've developed are based on being able to use these chart patterns to read the market. Do you see? So here's the dynamic trend bands matching. You have a fat channel, but look, if you just wait for a pullback to the red line or the dynamic trend band, or indeed in this case back to here, which would have held a stop, by the way, not a problem, you still get that trend down because of the matching dynamic trend bands. Or if you saw it turn blue here, now they're matching, down they go. So again, I'm just trying to give you this understanding of how to look for correlated matching dynamic trend bands with a corresponding sell or buy channel that matches that. You're going to end up, if you have the discipline to wait for those, you're going to end up with about 95 to 100% winning trades. Right here they match. Do you see this? Right exactly here. And it'll happen instantly on the chart. These are going to change colors instantly here. Here's the pullback, and up they went. Now, our rule on this is if the white line crosses the dynamic trend band number 2 and the spread between the dynamic trend bands is very thin, meaning like 2.5 points or less on NASDAQ, and you get a confirmation change in color on dynamic trend band number 1, you buy the pullback to the signal line, and you look for a 3-point move with a 2.5-point stop. That's our mechanical system. Now, as you get really good at trading this, you may find some slight variations. We show our track record based on 4 contracts. I could have, some people get all hyped up. Oh, you're showing $24,000 gain. Oh my God, oh my God. I go, well, I could have used 8 contracts and would have showed a $48,000 gain. How's that grab you? Oh my God, oh my God. Or I could have used a 1 contract and showed a $5,000 return. Oh, that makes you happy. But that's a mental state of the person observing the results. Obviously, I had a couple people mention that, only like 1 or 2 out of, our emails go out to thousands of people. But some people, they just can't handle big bucks, and I'm not sure why they're in trading. If you're in trading to make $3,000, $4,000 a month, well, that's okay. However, you're taking an awful lot of risk to make such a small amount. I'm showing you a projected way to project your mindset and learn how to trade with Boomerang and make up to $20,000 a month just using 4 NASDAQs. That's not very much. However, as you develop in your trading, you may find ways, maybe you're putting on 8 contracts. You're taking off 2 here, 2 here, 2 here, and you're letting 2 ride up here. You see what I'm saying? Just depends. People have different ways and ideas they like to use. Anyway, I hope you all understand that, and we will go into that a little bit. Now, I know that this is not on the rule sheet, but it's just common sense. One of the rules you know from the videos on the dynamic trend bands, when they cross, you can usually expect a move to the upside, generally a surge, and then a gradual move. Anytime there's a crossover, you see? But if the colors match, that's when you can look for a trade in that direction. Now, here's where it comes in really important, and I'll try to find an example that'll help us here. Here's one. Let's see here. I'll go into that in a second. Anyway, I don't immediately see an example, but the point is, whenever they match, even if the dynamic trend band the number 1 is up here, number 2 is down here, just as long as they match, you'll be able to find a winning trade in that configuration. When they cross over, you can always find a surge in that direction all the time, probably about 90% of the time. Some cases like this, here's a crossover right here. You see this? Yeah, they move up, they pull back, but the general drift of the market, like right here, 61.5 is where the crossover occurred. They did end up going up to 56.5. Eventually they're moving up here. Then you get these big crossovers like right here, and you get these surges to the downside, these whopper moves. So just an idea, here's a crossover here. Market immediately surges higher, pulls back, gets choppy, but the end result is a move up here. So that was the first thing, and I want you to take notes on that. And then the main thing, this is always what I say, don't take my word for it. Go back over 20 charts later after the webinar and see this for yourself. I'm going over 2, 3, 4 charts right here. Go over 20, go over 50. Be a fanatic like me. Go over 100 on the weekend. If you want to become a surgeon, it's 8 years in med school, 2 years apprenticing. Then you go into surgery and you work on fake bodies and apprentice with a top surgeon. Then you go into real bodies for another couple of years. Now you open your own practice and you need a track record of successful surgeries. I mean, I'm just saying, you have to take trading that serious. This is not some nickel and dime push button thing where you open up a $2,000 account, you're going to make $20,000 a month. You're going to make a surgeon's income if you apply a surgeon's intensity of study, and let me show you. So you're starting at the top with Boomerang, so why not just apply yourself to all the things I show you and really take it serious, just like a surgeon who decides that early in his life, I'm going to give up the partying and the hanging out and the beach and the girlfriends, and I'm going into med school. I'm going to give up 8 years of my life because I want to be a doctor. He sees that early in his life, right? So you need to look at trading that way too if you want to take it serious and be able to get all the big rewards of trading. Okay, that having been said, matching dynamic trend bands means the price is 95% of the time going to move in that direction. Get in a trade at the signal line when that happens, and you'll have probably 95 to 100% winning trades. You see? Now, the next thing I'm going to show you, and again, this is off the books here, off of the rules and methodology thing here, but it's just common sense. You have fat channels. Those are part of the rules. We talk about those right here. Fat channel forms in 2 to 3 to 4 spike candles, come out of nowhere off of another move, and they shoot up and they form a fat channel. You do not want to take the pullback to the signal line here at the top. This is a good example right here later in this session. This is a fat channel. This market was really choppy here. It's been choppy as anything the last 2 weeks because of this stupid debt ceiling stuff. That's a whole other topic in itself, and everybody and his uncle's debating that on TV. I'm not going to get into it. I'm just telling you that that's creating the choppiest market I've seen in 25 years of trading. Do you believe me? Did you hear that? I've been trading every day practically for 25 years, and this last week and a half has been the choppiest market and the most difficult market to figure out I've seen in the last 25 years. Our ratio of success of 80% with Boomerang and my daily directional forecast have maintained that, but I've had to stand aside a couple days on the daily directional forecast because of the way the news media and everything's running. So you have to stay in touch with the environment, and you'll understand what to do. Okay, here's the next thing I want to show you. This is a way to read the charts. It's a way to look at the market environment. It's a rule. Sure, it's part of our rules, but it's something I want you to just write down and use as common sense. We have fat channels in our rules, right? Well, I'm going to show you how wide channels reverse on the dynamic trend bands. Oh, this is very important, and you'll get excited when you see this. Now, it doesn't necessarily set up a whole bunch more trade setups. However, it will set up some, and I'll show you in a minute why. Here is a market that makes a fat channel higher, then it screams higher here. You see that? Well, look at the dynamic trend band. The dynamic trend band 2 is at 37 1/4, and dynamic trend up here is 42 1/2. See that? 37 1/4, 43, let's say. That's a 6-point spread between the dynamic trend band number 1 and number 2. When you see this spread out like this, you can go right here and say 43, 37 1/2. Oh my God, that's 5.5 point spread there. 80% of the time, maybe 90% of the time, those channels, that type of wide spread, we call these fat channels, I'm going to call these wide channels for the dynamic trend bands, they're going to fade. They're going to trade, they're going to reverse. So it's an early warning to you. If you see, you're sitting right here on the right side of the chart, and you see this configuration, and you quickly run down your cursor, and you go 38, 42, 75, you go, that's about 5-point spread there. And it gets a little wider right up here. You go, that's going to reverse. Doesn't mean a trade signal necessarily, but it's a warning sign. It's a way to read the markets. Of course, then we get a continuation with a surge higher, matching dynamic trend bands, a pullback signal line, and you catch a blast even higher. Now, notice the bands here are not that wide, but you could see how the market reversed when these bands widened out 5 points or more. That's the little rule there, you see? 5 points or more. Now, I'm going to be getting to a question and answer period pretty soon. I just wanted to spend this first 45 minutes going over a couple of new things here. It's very important. I got lots of stuff to show you today, and I could save it all for different seminars and that, but I like to give it to you so you can get ahead in the trading as quickly as possible. Here's our regular rule here. White line crosses the dynamic trend band number 2. Notice the spread here, 46, 48, 2 1/4. You trade to the next pullback signal line, down they go. This is our regular rule here. It's a little late in the day, but I'm just giving you an example of that. But I wanted to show you how these wide spreads work. These wide channels work in the dynamic trend band. Let me just go back to the sessions we went over and see if we can find some more so you can understand this a little bit, because there is a trade opportunity there. Now notice this one here. We've got 1175, 1575, 4 points, not wide enough. Obviously this is thinner here. There's nothing going on. The ones you want to look for are and also, not to make it too complicated, but when you have a trending market and the spread is 5 points, but it's a straight, and we'll find one in a minute, a straight 5-point spread all the way up or down, you don't want to fade those. What you're looking for in a wide channel reversal, here's one here, is this type of scene right here. You see how fat that is, that wide bubble? Right when the market's spiking down here, and then it gets over here. Shoots up, it's choppy, it shoots down lower here. You see that? We've got a spread of 46 1/2, 42.75. Over here it gets a little wider. 46 half, 41.75. Not quite, but you get the idea. Very close to 5 points. In that case, when you see a spread, a wide channel spread like this, you can go ahead and take the next counter trade channel in that direction. Obviously, you're going to look for all your bias indicators to be lined up green in that case, but you can go ahead and take those if you see a 5-point spread. 42 quarter, 46 quarter. This one was not 5 points. You would have probably avoided this trade. But that's just the idea. I'll find some more here so you understand how vital this is. Here's another one here. Let's see how this one did. 50, 75, 45, 50. Now there's a 5-point spread right here as this market's jerking around. You just quickly put your cursor up there and you just measure. It takes, 5 seconds. You can expect a reversal. Now it may or may not be a trade. In this case, you could have taken this trade to the pullback signal line, but you've got a steep dynamic trend band, so caution is in order. And of course, down they came further. So I'm just showing you how this works. Here's an example of a wide spread here that stayed wide because the market was channeling. Let's see, 47 quarter, 51 quarter. It still is not 5 points, so it's not a good example, but it just gives you an idea of what to watch for. Let me find one. Let's see here. 53.75, 48.75. Okay, here's a 5. This is classic here. 53 half, 48 half. 5-point wide channel. We call these fat channels when they turn into fat channel. These are wide channels. Look for a reversal. So when it happens, in this case, they spiked higher. The white line crossed a dynamic trend band. You got your pullback. That's a regular trade setup, and those are about 80% successful. All this measurement here of the wide channel told you get ready for this market to reverse. You see? Now somebody might say, well, why didn't you trade them down here? Ooh, okay. Well, I'm with you all the way on that. I do have methods to show you how to do that. I will show those to you someday, but for now, I'm just really trying to get everybody to concentrate on this one method that makes 80% winners. What's wrong with that? What's wrong with just relaxing, making proven trades? It's much better. Yes, I know how to catch this down here. I'll give you a glimpse of it a little bit later, how to do that. I do it all the time, but I also follow the core rules as my main focus. I've been trading 25 years, though, so after you've been trading with Boomerang 5 years, you will easily be able to expand into other things too. I'm showing you a core trading method that works incredibly well, but I'm also showing you how to be careful so that you can maintain your career. Here is a wonderful classic wide spread right here. Look at this, shooting up. See that huge wide spread? Let's see, right up here when they started reversing, the spread what'll happen is when the move is over, usually the prices will cross over the dynamic trend band, the white line will, and then when you see this continue to shoot up higher over these existing candles, you can go in there and measure that spread. 56 half, 63. So there's a whopper 6-point spread here. That's telling you to watch for a reversal. You brave soldiers that understand this, don't do it unless you fully understand it. You've gone over 20, 30 charts and seen it. You can go ahead and take the next pullback to the signal line in a counter move, which would be a sell channel in this case. Now, our rule is always you only take trades in a corresponding trade channel and a pullback signal line, which is marked by these magenta or blue dots. We don't have any other trading method for entering a trade. It's always within the trade channel and a pullback to the dots. Why? The reason is the way I've set Boomerang up, and this was after many, many, many years of researching all this to put it together. You want to have maximum force on that side of the trade so that the trade works out, right? common sense. What do you want when you put on a trade? If I asked you that poll, you want zero or no pressure on your stop once you get in, and you want that trade to essentially flow within, ideally, 5 to 10, 15 minutes max, flow down in the direction of that trade direction you want and fulfill your order for the winning trade, right? Isn't that what everybody would ask for day trading? Answer the question that way. What would you like to see in every trade that you take in day trading? That's right. You want it to not put any pressure on your stop because that makes you nervous, and we all hate that, but it's part of trading. And we'd like to see the trade move as quickly as possible, but within a reasonable time amount into the direction of our trade. That's why we use Boomerang trade channels and pull back to the signal line, because that way you're not entering in a dramatic entrance into the new trade channel, but you're waiting for that pullback to the proven signal line, and it's going to alarm up to six taps on the signal line for you within a channel until it gets 6 candles away. Then it's not going to print them anymore. But you want to catch within the first 3 generally. So you got plenty of opportunity to catch that. So it's a wonderful system. I designed it exactly and specifically for that, to give you a couple opportunities and to manage slippage. Just go in at the market. That's all you got to do. Let's see what we got here. Here's what it looks like. Chart Trader. This is exactly how we set up Boomerang to look. I know it's a review for most of you. When this happens here, you see this wide channel and you decide, I'm going to go for it. Why? Because I see how the market screamed higher. I think they're going to pull back. I see a wide channel on the dynamic trend band. I'm not going to wait for this trade right here, which would have been fine, but a nice 3-point winner. I'm going to get in early because I'm a gunslinger. New sell channel opens, pull back the signal line. You go right up here and you hit sell market. Forget ask and bid and trying to work the trade. No, just go to the market. I've built Boomerang so that it'll cover a couple ticks of slippage. No big deal. Now, if you trade way down here, then God bless you. You're not following the system. You still would have had a winning trade. I mean, if you traded like right here or something. But you just need to go back over the rules and review them, right? By the way, notice even though this trade screamed lower, you had a dynamic trend band crossover. Notice how they went up and stopped on the slight reversal right at the dynamic trend band number 2, and then a further slam lower because why? That's right. The dynamic trend bands are matching color, as we talked earlier. 100% winning trades trading into matching dynamic trend bands. You got to trade at the right spot within the location, but we show you how to do that. Anyway, so we've discussed 2 new points, which is look for 95 to 100% winning trades when you trade at the signal line when the dynamic trend bands match. Number 2, watch for wide channels. Fat channels are for the short-term trade channels, and what I call now wide channels are based on the spread between the dynamic trend bands. It's just another tool. I could keep it to myself, but I use it all the time. I see that spread widening out. I'm taking the next sell channel if it's moving up. It's something I want to share with you. It's part of my research that I do. Here's an example where the channel got wide, but this thing is just going insane. This was, I think, today. Yeah, this is today's action here. By the way, a little call for you guys, just so you can see that I'm the real deal. Yeah, they closed them up today because of this supposed agreement on the depth. Watch for the next week of some pretty strong pullbacks coming in here. I think we're going to get hammered over the next week or so. I explain it in my daily directional forecast. I rarely give longer than 1-day forecasts, but I think over the next week or so we could see some pretty hard downside slams. It's another webinar. I'll do one someday. But the point is, here's a wide spread here. 74. No, this is not wide enough. 5 points is the rule. This is just crazy whipsaw here. What those of you who've been with us a while, what are you supposed to do with this crazy whipsaw? That's right. Ignore it. Stand aside. Exactly. Right on. Good job, Erica. Stand aside. You don't have to trade. What law says you have to trade? This is suicide. Whether you're long or short in this stuff, you're going to get stopped out. It's not Boomerang's fault. Well, what do I do? Where do I trade? Don't trade. Just wait. At a certain point, a whipsaw exhausts itself. I'll give you a little hint about whipsaw, because this is, by the way, a little more informal type of webinar. And we're going to be going to the question and answer soon, but I wanted to show you those 2 points of how to get successfully 80 to 90% winning trades. It's very important, and I'll be glad to teach you more about that as we move along in our future of day trading.